This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me are my two very excited colleagues, Sonia and Nigel. Guys, hi, morning.
Hi, morning.
Tell us, why are you guys excited?
I'm excited because it's the start of a brand new month. And this is, it's September, guys. Come
Not
on.
because it's a Friday.
He's excited because it's his birthday month, right?
Yes, that's right. Birthday month. Yeah, but hopefully by the end of September we won't be singing that song, right?
Wake me up when September ends.
Hopefully not.
Hopefully the Bulls won't sing that song.
Yeah, absolutely.
You know, Sonia, I thought you were going to say that it's a Friday. It's a Friday.
That too.
No plans
And
that
payday. Payday has happened also.
Payday has
So,
happened.
Nigel, it's happened,
Yesterday. Yeah, midday. Before expiry played out payday, you know.
so many things to be excited about, Prashant.
Absolutely. Well, you know, can we be excited about the market as well? That's the question, right? Because yesterday it was not very exciting. It was maybe on the downside. So we had a monthly negative close on the Nifty in trade yesterday, which basically means that after 4 months of positive monthly gains, we had a negative monthly close, which is not exactly a great signal. The Nifty slumped, and this is the contrast, right? The sharp divergence. The Nifty slumped in the last 30 minutes, and whereas the small cap index, took off like a rocket. The small cap index rallied 0.5% in the last 30 minutes of trade. So it's just completely two different markets depending on what you're looking at and where you got exposure, etc. So I think it's very telling. Now, overnight cues have been very tepid. It's not negative or anything of that sort, but the point is that the US market had done about 4% till day before yesterday. I'm talking about the NASDAQ, 4% since last Thursday session. Last Friday included for the US because the Jackson Hole sort of symposium happened, the Powell speech, etc. But 4%, so it was a bit of a halt last night. S&P, NASDAQ up on your screen. You had the core PCE numbers, which came in line with expectations. Now, the point is, if you look at, many people are pointing to the details within this number. For example, inflation on the services side, which, by the way, still is very strong, and services inflation is sticky. But the market paid attention to the headline core PCE number, and they said, well, this is in line, so nothing to worry about. But the point is, today we get the monthly jobs data. I think that's going to be the big one. It's a more kind of credible once a month kind of figure, and I think it's going to be important. So that's going to be tonight. Comes out around US market open. One niggling worry at the margin is that while all this is going on, one particular commodity which matters a lot for India, which is oil prices, that they continue to inch higher. They're now almost at 87, right? 87 is a lot closer to 90 than 82 or 83 where we were about 15 days back. So yeah, we've come up quite a bit, and there are some reasons there as well. We can talk about that later with Manisha. Just to come back to the market here, it's been a slow-moving, kind of grinding kind of market really out there. You can look at it, I would look at it slightly still, give some benefit of doubt and say that it's not cutting through levels or anything. It's sideways, it's slow, it's grinding. So I would still be at the margin hopeful, but hope is not a sort of strategy in the market. The trend line support comes in at 19,210. So the low which the Nifty made last week was 19,230. That got broken. Intraday that got broken. We ended at 19,253. The support now, the trend line support which we've been putting out for the last 2 days is 19,210. Let's just hope that kind of holds. No sign so far that the fall in the Bank Nifty is ending either. That's been the weaker of the two indices, although yesterday the Nifty fell more than the Bank Nifty. For the Bank Nifty, we need a close above the 40-day exponential moving average, which is 44,517. And I think above that, you start to get some semblance of confidence coming back. And the low, which has not been broken in the Nifty Bank, which has been broken in the Nifty, that number is 43,600, which is not very far away. Less than 1% away. And that should not be broken on the way down. 19,210 and 43,600 in the Nifty and the Bank Nifty, respectively, are the levels one hopes will hold as we wrap up this week. The implied open is about 40 points lower. Sonia.
Okay, so as you've been pointing out, right, this market has been facing a lot of resistance at higher levels, and looks like that's something that can continue. The GIFT Nifty is not suggesting any major opening or anything. In fact, 19,450, the GIFT Nifty is now suggesting a fall of 40 points. 19,450 is the resistance that this market has been hitting for a while now. And it's in a very tight range. Give and take everything, the low has been about 19,200, the high has been 19,450. So we are stuck in a very, very tight range for the market. And within that range, there has been a lot of volatility. The US markets were under pressure overnight. In fact, in the month of August, the Dow has already lost about 2.3%. So there's been weakness across the global markets, rubbing off on our own markets as well. The non-farm payroll data is due later today, so lots of data points that will come through. The India Q1 GDP that came in was lower than the RBI's estimates, came in at 7.8%. So in that context, the macros are also not looking that great. Although there was buying by DIIs in the market yesterday, the selling pressure from FIIs continues. So there is, this feeling that perhaps the market has reached some sort of a consolidation phase and it would be tough for the markets to get above it. Couple of things to watch. The August auto sales comes out today. And in that context, don't expect any fireworks. The passenger vehicle sales, in fact, will see a modest 3% growth this time around. The small car segment demand continues to remain quite, subdued. The only pocket that has looked good is medium and heavy commercial vehicles. So in August, medium and heavy commercial vehicle sales would be up about 12%. And exports continue to be under pressure for two-wheelers. So even for Bajaj Auto, if you remember, last month was a very weak month for them in terms of export sales. And this one, that, subdued movement could continue. So all in all, lots of things to watch out for today. But the GIFT Nifty is suggesting a weak start. And that's been the case, right? I mean, it's been kind of lackluster, just ambling within this range for the market.
Well, that's right, Sonia. The month of August wasn't great. And I'll tell you what, the bulls will be looking at a close above 19,265. If that doesn't happen, then it'll be the sixth straight week that the Nifty will end lower. And this is something we haven't seen since COVID. The last time we saw this was in February, March 2020. So let's hope that doesn't happen. That's the data point with regard to the weekly close. Now, in the August series, so a big outperformance of the broader markets. The Nifty was down close to 2%. But you had both the mid-cap and the small-cap indices that did well. So you had the broader markets that outperformed the Nifty by close to around 7%. The Nifty was down close to around 400 points for the August series. And that's after gaining for 4 straight series. So that winning streak, so to call it, that did take a bit of a breather. What's the positioning, though, on index futures? Well, the FI gross positioning is the lightest we have seen in the last 2.5 months or thereabouts. In June 14, that was the last time we saw the gross participation. That's the long and short positions put it together. And if you look at the Nifty futures, the total open interest out there, well, that's much lighter at the start of the September series in comparison to the August series. So when we started the August series, we made this point that the index is very heavy. Now, this time around, on the index, the market-wide position is more or less in line. But on the index itself, well, on the Nifty, it's a little bit lighter than we saw at the start of last series. How the FI is positioned? Well, they're mildly net long on the index, mildly so, close to around 51% of their positions on the long side. Now, the broad range I'm looking at in the near term is around 19,000 to 19,400. And I say this because the highest open interest is at around 19,000 put on the downside. And on the upside, you have 19,400 odd. So, that's going to be an important number that we're looking at. What are the levels you're tracking then? The 20 and the 50 DMA, they become very, very important. So 19,400, 19,450, crucial data point on the upside. Well, on the downside, you're looking at 19,000. If that breaks, then the 100 DMA comes into play. And on the Nifty bank, the 100 DMA, well, that comes in at around that 44,000 odd mark. You don't want it to break that decisively, as well as the recent low. So those are the support levels. For starters, we start off on the back foot. And as I said earlier, you'll want the Nifty at least to close above the 19,265 odd mark to prevent the 6th straight week that we'll end lower.
Okay, well, lots of cues, lots of data points, which we will revisit as we kind of go along. But before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Matt Orton of Raymond James Investment will be joining in to discuss the global setup. Our research team will get you CNBC TV 18's list of stocks for the day. And at 8:30, Hemang Jani will weigh in with his stock ideas.
Okay, let's begin the day then. On the equities front, you have Chris Wood of Jefferies, who says that Jackson Hole has been navigated successfully by financial markets. If higher for longer has been the prevailing mantra of the moment, Jerome Powell delivered the message markets were hoping for, which is the Fed will proceed carefully before making any further interest rate moves. This has confirmed the base case of many market participants, including greed and fear, that the market have seen their last Fed rate hike in this cycle. I guess that's what people are hoping for, right? The last Fed rate hike.
Oh, absolutely. Well, we've probably already seen the behind of it, but we'll see. I mean, how things pan out. Many are hoping that's the case. We have views on macros from Indranil Sen Gupta of CLSA, who says they've raised FY24 GDP growth forecast by 50 basis points to 6% after first quarter GDP growth came in at 7.8%. They continue to see a shallow recovery on high real lending rates, US slowdown and poor rains. According to CLSA, beyond the base effect driven June quarter, growth should clock 5.5% in July to March 2024. They expect growth to recover to 6.5% in FY25 and then 7.5% in FY26, assuming that global economic cycle turns up by that time, which is 2025.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says through August, the US dollar index maintained its dominance against the G7s and rupee, largely attributed to the US 10-year yield reaching more than a decadal high before cooling down. He says the focus now shifts to the US non-farm payroll and unemployment data due later today, with India's Q1 GDP coming on expected lines at a year's high of 7.8%. He expects the rupee to trade in a range of 82.38 to 83.08 to the dollar, with a positive bias for the next few trading sessions.
Okay, well, Lakshmanan weighs in on bonds as well. He says that bonds have consolidated in the 7.15 to 7.2% zone. He says fall in US yields was offset by potential impact expectations on fiscal owing to the cut in LPG prices. Well, the same range with a mild bullish bias as lower price levels should hold, and that is seeing buying interest emerging from long-term players.
Well, a lot of stock specific action to track for you. We get to that in just a bit from now in our special Top 10 segment. But for the time being, let's run you through the list. We're looking at Cipla, TV18 Broadcast, Gujarat Gas, Bata, ITD Cementation, Genius Palm, and ONGC. All of them on the back of positive news flow. While on the flip side, you have Torrent Pharma, 5-Star Business Finance, and Balaji Mines that will be reacting to negative news flow.